So the Fed looks poised to cut rates at its next policy setting meeting that's coming on Wednesday. And if it does, Jay Powell may have to clarify his explanation of data dependence as the central bank weighs future moves. So, I mean, here, and also it's ahead of like this really big data point, which is the jobs report coming up on Friday. Is this new Fed don't need to follow the old way that we talked about it? This is a new uncharted territory, or am I overstating it?
Well, what's fascinating is that the Fed adopted this language of data dependence in the beginning of this year when it was kind of pivoting from its stance of we're going to promise rate hikes to we're going to promise whatever the data tells us, which is leaving the door open for a rate cut, which is kind of where we're at right now. Interesting because at that June 19 meeting, I mean, they were saying we're going to wait to see the data, how the data comes in. They chose not to raise rates in that last meeting. So it's kind of pretty simple game theory. If the data looks bad, we cut rates. If the data looks good, we probably hold steady. The data's come in good since then. So we had a solid jobs report for the month of June. Consumers looking real strong through retail data that we've seen in addition to the earnings reports.
Earnings reports, they keep telling us the consumers doing great.
Even CPI, inflation, the issue that the Fed has paid so much close attention to, the CPI print that we saw in the past few weeks was solid as well. It's interesting because even Rich Clarida, the vice chairman who actually coined the term data dependence, said last week that the Fed does not need to wait until the data turns decisively before moving on rates. That doesn't sound like data dependence to me, but I think this gets to the point, which is that actually what the Fed was doing in the June meeting was signaling that the next step was most likely going to be a rate cut. That's what St. Louis Fed President James Bullard, who's on the committee, said to reporters 2 weeks ago. Regardless, you look at the Fed funds futures markets, I mean, a cut's going to happen. Right, 75% chance that there's 25 basis points next week, a slim chance, but pretty substantial, 25% chance.
50?
No, I don't see that in the cards. Let me change that. It is in the cards, but not the most likely scenario. And again, if we saw that, a 50 basis point cut, we'd see stocks go wild that day. Might be a little bit overdone, but big picture, why is there so much focus on not only data dependence, but also on the language? The Fed is revising the way it's communicating. I think in 2011, the Bernanke Fed just kind of overreacted to all the scrutiny on it, and they became so vocal, so transparent that they became slaves to their own data. And the market is looking at what the Fed was saying about the data rather than the data itself. It's been ridiculous. So all of this has to change.
You don't think the Powell Fed is a slave to the market right now?
Oh, of course he is. He's boxed in. He is a slave to the bond market and to a lesser extent the stock market, but the bond market has him by a nose right now.
President Trump, we mentioned this just to bring up this tweet in case you missed it, tweeting that the Fed interest rate cut will do very little compared to Europe and to China here. I mean, he has been beating this horse for a while. I assume we will have a question about it. You're heading down there, and what will the answer be? Because I feel like Jay Powell's getting pretty good at...
She wants your question and the answer.
Right, I was going to say, are you trying to pitch my question for me, Jen?
No, I just know somebody will ask him.
Yeah.
And he's getting good at answering the question about Trump.
He is. I mean, he's going to say the same thing over and over again. We're independent. We don't pay attention to what the executive branch says. Interesting to note that Janet Yellen kind of stepped in the ring last night. She was in Aspen, Colorado, said that she sees the case for a 25 basis point rate cut. Kind of public appearances are already rare from Janet Yellen since she left as Fed chair, let alone actual opining on current policy. And I think that her saying that is kind of expressing the concern that the Fed sees with the optics of all of this, which is that the Fed is about to cut rates. Again, I mean, it seems like it's a safe bet that they will cut rates on Wednesday. If they do that, people will say, no, Trump was tweeting, cut rates, and then look, the Fed did it. Now, what Janet Yellen is trying to say is that the underlying data does indeed support an academic case for lowering rates at this moment, which is kind of giving Powell a little bit of cover and saying that, hey, there's people outside the Fed that are obviously well-respected economists as well that are saying, it's not just because the political pressure.
One of whom was fired, basically, by the president.
Effectively.
So, yeah, I mean,
I don't think she's mad that she's not at the head of the Fed right now, given all the issues we've seen.
I learned a lot. I didn't know that data dependence was trademark Clarida.
Learned that too.
Right.